This presentation is for information purposes only and doesn't constitute investment advice nor an offer, solicitation or recommendation to acquire or dispose of any investment or to engage in any other transaction. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading foreign exchange, futures, equity markets, cryptos can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial conditions. Past performance is not indicative of future results. Hi, this is Ahmad. Idea of this video is just to explain what is professional market trader diploma, because it will have almost 100 videos. So before going into that, you should know what it comprises. Basically, it's a diploma consisting of 26 exams, comprising practical assignments, MCQ based testing conducted online, backed by practical trading evaluation through a software which will measure the trade consistency and some other matrices. And we at International Advisor are collaborating with some counterparts who will provide funded real account at their own investment and risk, and they will share, however, the profits. And a certificate in collaboration with Market Masters Chicago upon completion of this diploma. It has 5 levels and 26 sections or chapters. In level 1, fresher, there are 6 sections: dynamic price action and chart types, multiple time frames, price action and swings, closes, candlesticks and candlestick math, trading into space, location and volume. Then in level 2 junior, there are 3 sections: trend lines, significant levels, supports and resistance, Fibonacci and Gan levels. Level 3 expert. Section 10 moving averages and rotation zones. 11 risk, reward and stops. 12 are Trendline Trade. 13 are continuation trade. 14 are R-zone trade. Section 15 are ice cream trade, and section 16 trading with channels. After that, level 4 starts, senior. It has 4 sections: trading breakouts, trading double tops and bottoms, trading head and shoulder patterns, and basic or fundamental analysis. Then the last, level 5, masters. It has 6 sections: Iliad wave theory, trading triangles and flags, DoW theory, trading wedges, trading gaps, creating a trading plan, and journaling your trades. So step by step, we'll move gradually. Now some detail of those sections. Section 1, dynamic price action and chart types. It includes description of various charts available and brief outline of their strengths and limitations, with the focus of lecture involves price action charts. Excellent information for the novice traders and good review for the experienced traders. Analysis of the time frame charts that are used for both day and intraday trading, description of their respective strengths and limitations, strategy for combining various time frame charts to conduct your market analysis. Again, an excellent information for the novice traders as well as with the experienced one as well, because we skip a lot of things which are involved and discussed in this chapter with the basic overview. Then comes section 2, multiple time frames. Only looking at one time frame doesn't tell the whole story. Let's say you are short-term trader and you have a signal to go long. There may be a major resistance area that longer-term traders are looking at to fare against, that will blow you out of the trade. This section will teach you what higher time frame or the combination of the time frame charts to look at before you make the trade. This course will give you an aha moment, a wow moment, because you will read a lot of concept and you will learn and study which are generally ignored. When you have wondered why the market appears to stop in the middle of nowhere. Section 3, price action and swings. Only looking at one time frame does not tell the whole story. Let's say you are a short-term trader and you have a signal to go long. There might be a major resistance area that longer-term traders are looking at, and there might be some other reasons. This section will teach you what higher time frame charts to look at before you make the trade, and what are the swings, various rotation zones, and some other things which deal with the price action movement. We'll discuss in details in this section. Section 4, closes, candlesticks, and candlestick math. Introduction of opening and closing price to bar and classification of bars inclusive of opening and closing price. Review of trading by living candle by candle and the negative impact of trading performance. Dealing with noise in the market and the utilization of candlestick math to mitigate market noise. A review of candlestick bars and characteristics, analysis and practical application of the candlestick patterns. Here one thing is very important to mention, which personally I have seen a lot of traders who have even good level of information of candlesticks, but still they are totally ignorant of what is candlestick math. So this is what we will study here. So it's equally good for novice and experienced traders. Section 5, trading into space. This is a very powerful concept that will improve your trading results for sure. It is trade filter that removes natural stopping points in the market and increases the probability of your trade being successful. The video describes the rationale behind space and clear definitions for space in multiple time frame environment. Also provides clear guidelines for using space as potential targets for your trades. The key factor to remember is that it's not a strategy in itself and requires a trade trigger to be effectively used. Section 6, location and volume. Defines location on a chart in terms of an event, time, and our price. Provides description of significance at key locations, analysis of volume and relationship with location and price action. Introduces multi-time frame analysis in relation to volume. Rationale to open interest as it relates to price action. So we will be discussing all these factors. in Chapter 6. Section 7. Trend lines. This set of lectures reviews the traditional trendline theory and introduce the trade trend lines, which was developed by Bob and Mike, and they belong to market masters, and we have copied their trade trend line theory here. It's a very powerful concept that how to practically utilize the trend lines and removing some of the misconceptions. The trade trend lines reduces subjectively with clear rules to produce these trend lines which provide entries and targets. The final lecture introduced advanced techniques utilizing trade trend lines, because this will be a set of 4 lectures in this section 7. This aspect is a critical component of the course, and it is strongly recommended to be confident in application of the techniques that are presented. Section 8. Significant levels, support and resistance. As with trend lines, drawing support and resistance level is subjective and difficulty in experience in being consistent. The set of lectures introduced significant levels with specific guidelines as to identify elements and patterns that produce significant levels. These are practical levels for trade entries, stops, and even the targets. Significant levels built on the trend line lectures and have a direct relationship with trend lines. This aspect can also be considered a baseline concept for proceeding into future lectures. And there are few things which are rarely taught in the market, and this is one of those, along with this space. And once you will come to know, we have a pattern where we use significant levels on weekly charts, and that's really powerful. And once you will go through this set of lectures of section 8, you will really learn a lot, and that will be really helpful for your trading. Section 9. Introduction to Fibonacci and Gan Levels. Lectures provide background and general understanding of Gan Fibonacci theory, discussion on pros and cons of Fibonacci versus Gan. While the strategies provided in the course provide better results with Gan, the lectures provide you with option of using either indicator. Focus is between zones that provide high probability price action with other techniques. Finally, analysis of utilizing clusters from both retracement and extensions for targets and trailing stops. We personally, in contradiction with majority, basically prefer Gan levels, but majority is using Fibonacci. So we will explain you why there is an edge, and although it's a slight different, but it will really be helpful in the trading. Section 10. Moving averages and rotation zones. Review of different type of moving averages, how they are calculated, the different inputs and popular issues. These are what mainly we'll be discussing. And description of price action rotation zone and dynamic rotation zone utilizing moving averages, which in combination are a significant component of the various strategies that will be introduced in future lectures. It provides rationale for high probability trades using the various rotation zones in combination with significant levels, trend lines, consolidation areas, and areas of support and resistance. So a lot of concept, practical and trading concepts will be discussed starting from section 10. Section 11, risk, reward and stops. This is one of the most important series of lectures in the course, and it has nothing to do with the experience as well. So it's equally good for fresher students or even the experts and seniors. So anyone who is not following this principle discussed in section 11 is really not going to have a career in this field, because he will not have any consistency, he will not have any trading plan which will work, because in many countries where it's like self-education, people exclude some of the key components, and this is one of those. First, there is description and understanding of the lizard brain and how it works, adversely impacts your trading performance. Moves on how to trade based on return of investment, ROI, with professional risk management, especially considering stop placement. Trade expectancy is then introduced in terms of targets, reward to risk, and win-loss percentage. Following lecture introduced Monte Carlo's analysis. The final aspect of this lecture is stop placement, both initial stops and trailing stops, because trailing stops are misunderstood and they are not placed properly, which really can increase the profitability. Finally, walkaway stops are discussed. Of all the lecture series, this is the only set with 5 lectures, and the implied importance is substantially higher. And once you will go through this lecture, and even if you are trading for years and if you have not been following these guidelines before, then you will feel a drastic change in the results of your trading. Section 12, Trendline Trade. This is a complete trade setup used by all of us, using all that you have learned in all of your previous courses. So this is a practical combination of some of the strategies. This trade is great for any market, any time frame, and has excellent percentage of win trade if used properly. This is one technique using multiple strategies we'll discuss, and it gives good trading initiatives. Section 13, our continuation trade. This section covers how to use R zones on a pullback if you have missed a triggered trade, such as the trendline trade. So without following the market, if you miss the opportunity, so where to re-enter again, then R zones are natural rotations in the market using a specific set of moving averages. This trade uses space, trend lines, significant levels, R zones, location and volume, and multiple time frames, which we have already been studying in previous sections. Section 14, our R zone trade. This section teaches you how to use the R zones by themselves to trade. Obviously, you will need to thoroughly understand R zones, how and why they are formed. This trade also uses significant levels, Gan levels, multiple time frame in its setup. Section 15, our ice cream trade. This section teaches you a special setup to trade reversals. We call it the ice cream trade because the setup looks like an ice cream cone on the charts. Very powerful setup. The trade requires a thorough understanding of R zone, multiple time frames, GAN, and significant levels. Section 16. Trading within channels. This section teaches you how to trade within congestion areas. Since the market spends 60% of its time in congestions, this is an excellent course to take. This trade is best taken when the markets go into congestion from a previous trend, whether it's a bullish or bearish. This trade uses significant levels, GAN, multiple time frames as part of the plan. Section 17. Trading breakouts. This section teaches you how to trade breakout from congestion area once it's broken. Once the market have been in congestion for some time, they tend to want to break out from congestion due to the pressure built in. However, there can be false breakout quite often which kills traders. We created the shake and bake trade strategy just for those false breakouts as well as a traditional breakout trade. Understanding how to trade congestions is just as important as learning how to trade trends. This trade relies on a complete understanding of GAN and significant levels. Section 18. Trading double tops and bottoms. This is the classical reversal pattern that is taught in all the books. However, with our own twist that drastically increases the probability of the trade. Traditional reversal trades have such a low probability because the typical trader doesn't wait for confirmation. This trade provides detailed rules to make sure the market is not just resting before resuming the trade. This trade requires the understanding of GAN levels, significant levels, trend lines, multiple time frames, and R zones. Section 19. Trading head and shoulder patterns. This is an advanced reversal pattern similar to that what is taught in double tops but with two pullbacks instead of one. We developed our own twist that drastically increases the probability of this trade as well. Traditional reversal trades have such a low probability because the typical trade does not wait for the confirmation due to some false movements. This trade provides detailed rules to make sure the market is not just resting before resuming the trade. This trade requires the understanding of GAN levels, significant levels, trend lines, multiple time frame, and R zone. Section 20. Overview of fundamental analysis. This is the only one section where we will just discuss some of the basics. Although majority of the traders worldwide believe more in technical analysis and follow the price action movement, as technical analysis give us more clear picture of the market moves being based on the fact that history repeats itself. That's why it involves the historical charts study to forecast the future moves. However, some traders do follow the fundamental aspects in addition to technical studies. So we will discuss some basic fundamental analysis as well as with emphasis on fundamentals are discounted and how we can use it for especially longer term trades. Section 21, Iliad wave theory. Iliad wave theory is a bit modern yet interesting to know some facts and figures. The Iliad wave theory is a form of technical analysis that looks for recurring long-term price patterns related to persistent changes in investor sentiments and psychology. The theory identifies impulsive waves that set up a pattern and corrective wave that oppose the large trend. We will study which aspect of these might be helpful in our trading, though we are not mainly focusing on it, but yet to have the proper knowledge. And again, it also uses significant levels, trend lines, Gan and Fibonacci, and some combination of other strategies we have already been discussed in previous sections. Section 22, trading triangles and flags. This is an advanced pattern similar to Wedges trading pattern, comparatively a rare pattern, but when it occurs, it is a very high probability trades. Understanding how to trade congestion is just as important as learning how to trade trend. So both in triangles and flags, we have already studied. It comprises congestion areas, and it's the combination of congestion and the trading breakouts, which both you could have studied in previous sections, so we'll combine both here, along with understanding of Gan, continuation patterns, reversal patterns, and significant level of. Section 23, DoW Theory. The DoW Theory is a technical framework that predicts the markets in an upward trend if one of its average advantages above a previous important high accompanied or followed by a similar advance in the other average. Old is gold. Even though this is more than 100 years old, the DoW theory is still relevant in the current trading market. This is because understanding DoW theory, traders can benefit from spotting and exploiting trends in the market. Section 24, trading wedges. Wedges are a more complex pattern and have many different parts. Wedges can be challenging and are part, and generally these are misunderstood and are not for the beginning traders. We will go through what the wedges look like, how we construct them, and the target and the stop requirements. It requires combination of a lot of studies which we have already discussed, mainly comprising significant levels, congestions, breakout, continuation trade patterns, and Gan and Fibonacci as well. Section 25, trading gaps. When the markets are closed or in a slow period, gaps are created. Unlike what you have been told, gaps do not always fill. Here is how to trade smart with gaps. This trade requires understanding of Gan levels, significant levels, hour zones, and trend lines. Gaps are like windows in the market. They occur mostly in markets that are closed overnight. They are excellent to trade, but most traders use them improperly. We will mainly study the 5 different types of gaps and see how to deal with them. And the last section, again, very important, creating a trading plan and journaling your trades. Creating a trade plan is like developing business plan for any business, and no trader can become a successful trader consistently until followed by a professional trade plan. We will cover a lot of vital elements to creating the trade plan, mainly comprising logical and technical reasoning, the feedback loop consisting of trading logs and trading journal, ladder of consciousness, a lot of psychological tips, and we will also share with you an Excel sheet which we have developed, which comprises more than 50 indicators and parameters which one must follow. And as we learn from our mistakes, if you are not having a journal of your trades, you are unable to learn from your mistakes even. And if even you can't learn from your mistakes, it's a big mistake which we should avoid. So we will study how to utilize all the teaching and techniques we have studied so far in a proper professional way to become a successful trader and to be in this industry as a career. So this was the overview. It was really hard to discuss a lot of details for every section, yet it gives you a bit of information about it, and looking forward in the course and in other videos to follow, and I'll always be there for any questions, or you can email or give in the comments. I'll get back to you as soon as possible. Thanks for your time. Goodbye.